Alright, we're recording. Sweet. Alright, well, hello. This is the start, kind of the start of a new series that I'm trying to do. I'm trying to just document my trades as a day trader, just following along with the journey, kind of trying to learn as much as I can, learn more about myself, and really just master a useful skill like this and learn as much as I can, right? Um, that's kind of it. I have uploaded before a video like this. I've uploaded 2 or 3 of them. I didn't like how they turned out, and they also had my account number. And some people are weird out there and would probably try and hack my shit. Maybe I'm just being paranoid. I don't know. So deleted those, scrapped them, and I've kind of like figured out a format that I want to follow. So these are more only for educational purposes and only for myself and to keep track. Obviously, like if you watch this and you can learn something from me, that's even better. So let's go through my trade today. This morning picked up a W, very nice. I'm just gonna go through my thought process, what I'm thinking, why I entered, why I did what I did. um, Trading micro Nasdaq futures. We're gonna start with our chart on the daily time frame. We're looking really bullish on the daily time frame. We even just recently broke structure above this recent high right here, right? High then low. So set a new high right there. We just broke structure above, so gonna be an interesting next couple of days to see where our trend is gonna go and if we're gonna really respect this or maybe we're just filling in this gap all the way right here. So it's gonna be interesting to see. So yeah, daily bias is bullish. However, I'm looking to enter in for a retracement. That's specifically what I'm doing. Is I want to, you know, scale down to my smaller time frames and see what's happening there as well. So, daily it's nice to have in mind, but this is where we get down to our smaller time frames as well, right? And if you look right here, like at this level right here, so we can see low then high. We mark out our new low right here, and what do we have? We have a break of structure right here on the 4 hourly candle. Now we didn't get that until 12 o'clock, till this candle closed, and we traded earlier in the morning. But this is something to keep in mind. This is something to keep in mind for the future as well, future trades that I'm going to be doing. So I'm going to scale down to the hourly, where this is I really started my analysis here. So here's what I did. I started by marking out this order block right here. This blue candlestick right here is our order block. It is the leg up prior to the leg down that caused a break of structure. That brings me. Let's slowly roll a little bit here. The biggest thing, like the starting confluence that I'm looking for, is a liquidity sweep, which we get right at this level. High then low, high then low, high then low. We've taken out orders up here. We are actively sweeping up here, right? Before these, before this purple rectangle and whatever, if you ignore everything, all the candles in this purple rectangle, this is a clear and obvious liquidity sweep. Now I see this order block right here. I'm thinking, okay, great, I'd love to see something else. High time frame break of structure right here on this hourly at 8 o'clock, which tells me I see this break of structure. My head is immediately going to retracement. Let's find a retracement and let's look to go short again. Let's look to see if we can enter in on a short. Scale down to my 15-minute time frame. I really enjoy using the higher time frames because they hold a lot more value, and they are generally a pretty good indicator or a better controller, a better say of like where price wants to go. I see this 15-minute fair value gap. I mark it out right here. Let's just go to text. 15 min fair value gap. Awesome. See this 15-minute fair value gap, and I'm just thinking, let's retrace up to here, and then we're gonna enter. And this trade was very important today for me psychologically, only because I woke up a little bit, later than expected. Nothing wrong with it, but it was around this point, and I see this massive pump down, and I'm thinking, if I just was up for market open, whatever. That's the wrong way to be thinking. That's my old mentality. Kind of is let's not get too caught up in like the opening moves. And if anything, this is not a leg that I'd be comfortable trading off of. I want more price action. And we get our hour of price action right here. We could see pump, dump right down here. What are we doing next? So on the lower time frames, I see that we get this liquidity out down here as well. We take out these lows right here, and I'm thinking, okay, boom. We take out these liquidity levels on a low time frame. Let's look for a retracement up to this 15-minute fair value gap. Price is a chop fest all in between here. We can look and see even right here that we have a 1-minute order block. The leg down, and I'm still like learning order blocks as well. The leg down before the break of structure to the upside, right? So we broke structure up here at this most recent high, and then so it's gonna be these two black candles down. And look, like we go up, go right back into the zone, go up, right back here, go up, right back here. Then we get all of our orders filled. Boom. We're targeting this 15-minute fair value gap. Awesome. What do we do? Do we enter in, off of the beginning of the zone, off the top of the zone? What was my entry? Why did I enter where I did? Well, one of the things that I like to use is a Fibonacci retracement. It's not, it hit this line, I'm gonna enter. No. Look, this Fibonacci retracement right here is I'm just measuring the scale of this range, right? From all the way up here to all the way down here. And equilibrium is right here at this 50%. Now, if you don't know, and this was something that I just had the chance to learn recently, is 0.618 is often called the golden zone of the Fibonacci retracement. Everything in nature is based off of this, number. It's super cool, super interesting stuff. But the spiral on flowers, or I don't even know. It's insane. So it's just one of those things that I like using, right? It's not my tell, but it's one of those things that I like using. I see we get back into this fair value gap, and we fill it almost all the way, at least on the minute. It's like right in here, but I like to use the 15-minute fair value gap. I'm not going to mark out this 1 minute because I don't want to enter right here and then, this 1 minute fair value gap is almost closed, but that's besides the point. I'm kind of just bantering right now. So let's look at our most recent low that we get. We go high then low, low then high. Okay, we're going to mark you out as the low. We're going to see what price does. We're going to wait for a candlestick below here, basically. We get that right here. Unfortunately, not able to enter in right at that position. We get filled at about this, 19,837.75. Looking to just kind of keep my stop at the level that I'm comfortable with losing, which, obviously I don't want to lose any of my trades. And also this trade was a little bit over leveraged. Fortunately, it worked out in my favor, but something to just keep in mind. And with targeting a retracement, like a fair value gap, I look to target this breakaway gap right here on the minute time frame. And if we look You can measure out. Oh, you can measure out right there. Set our TP right here, and we get a great 2.25 risk to reward. Right off this candle close right here, we get we enter in a little bit later, which is fine, and set our stops at these recent highs. And I think honestly, this was the quickest trade that I've ever had before. um, this was a 8-minute trade. One thing about me is I'm trying to get longer trades so I can really see my strategy and see how it's working, but it's okay. Um, and originally my TP was set down to here, and if we look 367 risk to reward, and we would have gotten filled. Why this trade? Let's go over why this trade was good and why this trade was bad. Why this trade was good? We won. We have a winning trade, right? We can see that we swept liquidity right down here. We have this order block. We see price go in, and we're going up. We're targeting this 15-minute fair value gap, and we could see price fill back into this. We could target this order block too if we want. Look, we get all the way down here on this minute. We have so many chances, so many places to get our orders filled. Right now, why this trade was good? Caught a W. Um, Followed our plan exactly to a T. I said we're gonna wait for. We got our liquidity sweep. We have our break of structure to the downside. Let's wait for a retracement up and look to enter in shorts off that position. Now, let's go back to the original trade. Right. We should have stuck with these lower lows. And why? Even if we didn't want to target the wicks of these, we can target the beginning of this order block right here, where orders are able to get filled. Right here, we have 10 minutes of just consolidation, and we have all these orders getting filled. One more time, third time's a charm. Guess what? We're gonna even go deeper. We're gonna take out orders down here, and we're gonna target once again this 15-minute fair value gap. We're gonna target imbalances. So I think honestly for next time, and I say this every single time, and it's so easy looking back at hindsight, right? But instead of targeting just this imbalance right here, set TP1 right here, have 3 limit cells right here, and then leave leave the other 2 in for these lower level liquidities right here. And once TP1 gets hit, we can move our stop to break even. It's not a winning trade nor a losing trade. It's a winning trade, but not as much of winnings as possible, if that makes sense. So that's it from a psychological standpoint. Psychologically, this was a poor trade. I originally had TP set down here, and just didn't work out. Obviously, once we get down here, we can de-risk and just um, go break even. But I wanted to secure some profits today, and I kind of was bag chasing a little bit, which is unfortunate. So, following the same strategy, just need to stagger where our TPs are because we are kind of limiting ourselves with just, okay, let me sell all 5 contracts that I traded today right here. Let me sell them right here. No, I'll de-risk majority of it by taking 3, leaving 1 in at the top of this order block right here, and then we can even look for TP3 at the top of this imbalance or at the bottom of this imbalance that hasn't been quite filled yet. That's it for today. Looking forward to the next trade. Markets are always open. Markets are always flexible. Do not have FOMO, because if I had FOMO and entered in shorts right here, would have gotten stopped out pretty quick. So that's kind of it. Till next time, thanks for watching. Peace.